Hello, everyone. I'm Andrew Constantinides, an advisor with Neil Jesani Wealth Management. And considering that equity strategies are one of the core components of our multi-asset allocation strategy, in almost every client scenario, whether it be a significant portion of the overall portfolio or a very small portion, I thought it important to discuss some of the tools and the process that our team goes through when we're trying to identify an opportunity in the market, or more importantly, determine a sector or specific stock that is undervalued when compared to its peers or compared to the sector or the overall index. So there's two main processes that we use. Both I'm sure you've heard of. Today I'm going to talk about fundamental analysis. Fundamental analysis is really just a deep dive, a critical deep dive into the company's fundamentals, meaning their balance sheet, their financials, their debt, their profitability, their margins, whereas systematic or technical analysis, which is the other strategy we use, is really identifying overall macro or micro market trends within a sector or a particular stock that have not yet been priced into that particular equity, that particular position. So essentially with technical analysis, which I'll do a separate video on, you're really trying to get first mover advantage and buy into that equity and into that emerging trend, and then allow the price to go up or down depending on what side you're on. But going back to fundamental analysis, I really break it down. There's really three main categories that you have to walk through to go through the process. And the first one is an economic analysis. So this is where you're looking at macro factors in the economy, things like GDP, US corporate earnings, current inflation trends. Interest rates is a very important one. An example for interest rates would be, let's say we're looking for mid-cap growth companies to add to a particular model for our clients. The fact that we're in a rising rate environment means that for growth companies, it's much more difficult and more importantly, more expensive to borrow money. That money that companies borrow typically goes to expand their business. So therefore, it's more difficult for the company to borrow money to then continue in the growth phase. Whereas when there's low interest rates, it's very easy for companies to borrow money and lots of it, which they can then deploy and propel growth in the overall company. So those are the overall economic factors that we look at. Kind of under that line, we look at industry analysis or industry specific factors. For example, the economic situations are going to have more impact on one industry than on another. The example that I was just discussing, let's say we're looking for a growth company and we want to determine what is a good P&E for a growth stock. Well, we're going to look at that particular industry. One, determine if we're at a point in the market cycle where it makes sense to buy equities in that specific industry or sector. But two, what is the average P&E, the average profitability or the average margins when you factor in the entire sector of the market and average them all out? So that's the industry, and then below the industry is where we actually do the fundamental analysis that's company specific. So there's two key components when you're doing fundamental analysis on a specific company. There's quantitative components, and then there's qualitative components. Now, quantitative is the one that most people are familiar with. Quantitative is actual numbers, things you can see on paper. So real numbers, we're talking about things like the debt that a company has, the cost that they pay to service that debt, more importantly, compared with their peers, their profitability, their profit margin, what their return on equity, their price to earnings ratio, which is basically their net earnings or their net income, or their P&E multiple, which determines when compared to their peers how expensive or overvalued or undervalued a particular stock is. So I also like to look at 10K filings. After every earnings call, public company files what's called a 10K. This has in-depth statistical, real quantitative numbers on the performance of the company. So we always want to, of course, use it when you're identifying a company to invest in, but also we make sure that we keep tabs on that. It's a consistent process to make sure that that particular position should be kept in our model or in a client portfolio. Even better than a 10K, if the company's done any equity raises in the last year or two, look at the S1. That has very in-depth information about the market cap of the company, if any insiders have sold or bought shares recently. So those are two great tools that we have access to, that we're looking at on all the equities within our model. But but in addition to the quantitative components, there's qualitative components. So these are more big picture items, like what's the market share of that particular market that this company has? So what is their competitive advantage simply because of their market share? Or what about their management team? There's an awful lot of information out there these days about everyone, so you can certainly do a lot of research into each member of a management team, the CFO, the CCO, the CEO, and the board of directors, to see what their track record is. How much success have they had in previous ventures or previous companies? So if you have one company here with all else the same, and it's a brand new, unseasoned management team, versus one that has 6 members of the board with 30, 40-year track records of successfully buying, selling, or growing public companies, of course, you're going to go with the one with the more seasoned management team. So this is really just a general sense of the equity portion of our over allocation, and just one of the factors that we use in making a determination. And by the way, very important to mention that neither fundamental analysis or technical analysis or any other type of analysis should be used on its own. These should be used in tandem with or in conjunction with other methods of analyzing the market or a particular stock. For example, macroeconomic trends that are completely on the outside of the fundamentals or technicals of the company, but that could certainly have an impact on that particular share price. So in the next video, I'll talk a little bit about technical analysis. But if anyone has any questions about any particular stocks, or would like me to take a look at their portfolio, certainly you can reach me at 954-800-8552. As you know, Jesani Wealth Management, we're fiduciaries, so we're acting in the best interest of our clients. And thanks again, everyone. Take care. Bye-bye.